So let's talk about Rick Rule and what he's doing in this current financial environment to protect his wealth. We know you love gold. We know you love silver. We know you love the mining stocks. Where should we be placing our bets here, Rick?
With the caveat that no one really knows, given that you've paraphrased it, placing my bets, I'm doing really three things. The first is that I have large cash balances. I understand that the yield on savings products is so low that I'm losing purchasing power on those cash balances. But my belief is that cash will give me both the courage and the tools to take advantage of volatility. And I see volatility as the hallmark of the market over the next 3 years. So I'm running in excess of 20% cash balances.
Okay.
You mentioned gold. Gold has been very good to me and very bad to me. I have been through two prior gold bull markets in my career, the 1970 to 1981 market and the 2000 to 2011 bull market. Gold bull markets, when they occur, and they're different than rallies from oversold bottoms, gold bull markets, when they occur, traditionally have more dimension than people think. In other words, the indexes move further and they have more duration. They stay in place longer. I suspect that this gold bull market has a lot of legs left. It doesn't mean that we won't experience downside volatility, which we are now. In a gold bull market, cyclical declines of up to 20% of the index are common. But if you look at the cause of the increase in gold price, which is to say, at the biggest level, concern that savers have about the purchasing power of their savings and other savings instruments. A couple factors in gold come immediately to mind. The first is quantitative easing, which by its definition debases the currency. If you attempted to quantitatively ease, if you issued Danielas, they'd put you in prison. But if the government does it, it's policy and they get reelected. Deficit spending, too, by definition, debases the currency. Debt and deficits. And the debt currently is almost unquantifiable, over $150 trillion. Now, I'm not trying to say it all comes due next week. I'm just trying to say it debases the currency. And the deficit last year in a so-called conservative administration exceeded $3.5 trillion. The third is artificially low interest rates. The best determinant of the direction of the gold price in my career has been the real interest rate on the U.S. 10-year Treasury, the world's benchmark savings instrument. Right now, they propose to pay you about 70 basis points in a currency that the Congressional Budget Office says is depreciating by 1.6% a year, which is to say they absolutely positively guarantee you a loss of almost 1% a year for 10 years. Our mutual friend Jim Grant calls that return-free risk. Gold is competing with return-free risk. Now, I'm not saying that people should back up the truck and put their whole savings into gold, much less gold stocks. But I am overweight relative to my 40-year average in gold. And I am reestablishing larger positions in the gold stocks. I saw them get ahead of themselves in the summer, mercifully. So I'm doing that.
So, wow. Okay, there's a lot of good info there. Would you say you're more bullish on gold now than you've ever been, Rick?
No, but I'm more bullish on gold than I have been since I had the experience that I have now. I was certainly bullish on gold in the year 2000 simply because it was oversold. And I think the question really goes increasingly on a personalized basis. There was a point in time in my life when I felt the need to make a lot of money. Now my primary need is to save the money I have. And the consequence of that is that between bullion and cash, I am highly, highly, highly liquid. I don't look at gold bullion itself as an investment so much as an insurance policy. The gold stocks I see as investments, and I am way overweight the gold stocks relative to the rest of my portfolio on a historical basis.
Rick, what was the game changer for you? You're obviously extremely successful. You're at the top of your game. Everyone knows you in this industry. Obviously, you have a very comfortable position at Sprott. But what would you say was the game changer for you from being, you know, making good money to becoming wealthy? Was it the network of friends that, you know, will say you should be in this, you should be in that, because as you grow in your position, you meet people who are in the know? Was it just educating yourself? Was it part luck? What was that those defining years? Because I'm sure it didn't happen overnight, but what was the game changer?
It actually did happen overnight, Daniela.
Oh, well,
And
there you go.
I have to thank my wife, Bonnie, who you know, for this.
Who's lovely.
When I was about 29 years of age, I was very concerned with making money, and my sense of self-worth was tied up around money. And Bonnie convinced me over a fairly brief period of time to stop worrying about that, to start worrying about generating utility for other people. Not how much I made, but how much I could help other people and make other people. And she suggested to me that if I did something that I loved, that I was competitive at, and I didn't worry about making money, I just worried about increasing my utility to others. She didn't say it in those fancy words. I forget how she said it. That the rest would take care of itself. And honestly, Daniela, when I stopped worrying at all about making money and started worrying about how my professional career could benefit people that I was working for, my clients and things like that, within 3 months, my fortunes changed dramatically. The consequence of that is cumulative and compounding. You can't be a capitalist if you don't have capital. And the fact that I started making money allowed me to deploy more money at the same time that focusing on delivering value for others enhanced my reputation. Then, of course, there was that wonderful, albeit brief, bull market in the early part of the decade of the 90s, which was transformational for me because I had a reputation and I had capital, which set me up for the bull market beginning in the year 2000, where I was really, truly all in, both in terms of the way that I encouraged other people to take advantage of the contrarian opportunity I saw, and the way that I was able to take advantage of it too. So yes, networked helped. Hard work helped. Being a contrarian, that is writing checks when other people are terrified, helped. But what helped the most, ironically, in terms of making money, was forgetting about making money and understanding that in order to do it, I had to deliver utility for other people. That was the transformational moment. And it really, truly was almost overnight.
Wow. I love that. And I think on that note, I'm going to wrap that interview because I don't think I can beat that.
Great.
That's really good advice there, Rick Rule. Thank you so much.
Always a pleasure, Daniela. I look forward to doing this in person someday, somewhere.
I know, I miss it, right? Though we miss our annual reunion in Vancouver, San Francisco. We'll get back to that, Rick. We will. I'm optimistic.
I look forward to it.
And your show and your own conference in Vancouver. So hope that comes back.
I hope it comes back. Well, I have to say, with regards to conferences, while I miss the personal interaction, I don't miss 3 or 4 time zones, transportation safety administration, strange hotels.
I have to agree. It's a hard life. You know, people just see the glamour, and I would hear, "Oh, you're so lucky you get to travel," and so but you don't see the delays, the time away from home, you know, just tired of sleeping on hotel beds and stuff. So it's a hard life indeed. But yes, I definitely miss interacting with people like yourself, Rick. But we'll get back to that. I'm optimistic. So.
We'll find
nice
a way.
to see you. We'll speak soon. And say hello to Bonnie for me. She's a wonderful woman. So
I shall do just that. Thank you.
And thank you for watching this edition of Stansberry Research. As always, I invite you to follow us on our social media channels. We are on LinkedIn, Instagram, Facebook, and Twitter. In the meantime, thank you for watching. I'm Daniela Cambone.